Welcome, everybody, members of the Intelligent Stock Market Facebook groups. Today is one of those special days again. Every now and then, as you know, we host some of the friends of a stock card that collaborate with us, or we like their content, or they do a good job on their YouTube channel. And today is one of those days. I have Dr. Alex Coe on this show today. Alex, welcome to this recording and this live research.
Thank you very much. Thank you for having me here today. It's an honor to be part of this conversation, and hopefully we generate some interesting topics today.
Yeah, absolutely. So, Alex, you and I were talking about to the topic of today, and you brought up FSLY. And I'm really happy that you brought that up. So tell me a little bit. I have a lot of questions for you, and it's on my radar, actually, as a matter of fact. So tell me, why did you choose, or what basically piqued your interest in this stock, or what are your followers are saying, and set the foundation for this conversation.
Yeah. So I like FSLY. Being a YouTuber myself, I stumbled onto FSLY. Not by my own, it's by somebody asked me, have you checked out FSLY? And, then I started doing my research, and I thought, wait, because of the lockdown, we need internet. And then FSLY is the one that's actually making things fast and efficient for us. And we don't realize it's not the broadband speed, but it's how FSLY distribute. And the reason why I brought up FSLY today, because back before FSLY's earning came out, it was one of my most spoke about video, and people talk about it. Lots of people bought it. And it's just last week, it was all-time high. And now today, it's almost back to, it's just dropped. Some call it a falling knife. Some call it looks like a pump and dump, share. It's got the characteristic. But, I thought I'd come in today and just to share that I think, people shouldn't misunderstand, FSLY. I think that's two sides of the coin here. So I think it's quite important to just understand a bit more about it.
So what drove the movement up in your point of view, and what is it that what's happened? I think after the earnings, that's just kind of like the falling knife type of shape
it's just a dump. Yeah.
Yeah. So what happened? What's the story?
The reason for it going up, because obviously people knew about the earnings, that they were going to beat the earnings. The last quarter, which brought them from like 20 to 60, almost 3 times. It was the great earning at Q1. And then Q2 earning, it was about 50%. And then Q2 earning went over 150%, beating revenue expectation. It was really good. They beat expectation and making profit this quarter. And it was just one thing that the news tells us, that because they were associated with TikTok, and we all know that Trump is linked with the banning of TikTok. And now because of that, it's falling. But the thing is, when I did my check, TikTok's only 10% of their generated revenue. So I don't know how a 10% would coincide with a drop. So, and I think the second real reason for the drop, which I believe, I don't really believe the TikTok part, the one that I really believe is people are trying to take profits, because folks were trying to take profits off Apple, Amazon, Facebook, but they blew everyone away. And now we've got FSLY, Crowdstrike, we've got Zoom and everything. So people rather take profits off this high-tech stock, liquidate themselves, and just put the money close to the chest until the next move, instead of taking money away from Apple and Amazon and Facebook. That's what I feel. That's what I think. And I went around looking for information on Twitter, and everyone almost said the same thing in agreement as well. So I think that's the real reason, just liquidating, regardless of a great earnings report, which, and not. I don't really believe the TikTok element part, even though CNBC speaks about it.
Yeah. I mean, to some of it, as you said, I think I agree. Like the sentiment around TikTok, it's becoming bigger than what the situation is. But so the earnings, as you said, was marvelous. Basically, they did fantastic growth, and I think, if I'm not mistaken, they even turned into non-GAAP profitability or something like that, and they really improved that performance.
Yeah.
So I mean, obviously, stock market is all about moving forward, right? Like, it doesn't matter what it's been doing in the past, or it doesn't even matter that it's down like a falling knife, as you and I have been talking about it.
Yeah.
Moving forward from here, what are the top 2-3 reasons you see that the stock can go back up and even like, grow from where it was like back to 80 or 90 or whatever
Yeah.
it was, and then even like double and triple,
Yeah.
or would it actually double and triple from what it is? So let's talk
Yeah.
about that.
Yeah. Firstly, I would say that, Fastly is, as it stands today, regardless of the earnings, I think they're still overvalued. I put my hand up, even though, I would like to put more money or invest, but I would say Fastly is at $70, even though they dropped 420, it's still overvalued. Because $70 to me, when I work it out from my own calculation, $70 is when they have an EPS of 0.4 in the next 4. So the next 5 quarters earning, the next 1.5 years or so, they need to beat their current estimate by at least, another 100% in that growth. Then they are justified to be at $70. If they miss the ball at one quarter, they will stay at the low 50s, 40s. So I think in terms of growth, one thing that I always tell my viewers is that Fastly just IPO'd in 2019. They haven't really used the money to build their infrastructure, their cloud computing. They haven't used the money to buy the hardware and build their structure around it yet. And they're filled up with their sales revenue, their quota on their infrastructure. So once they get the money and start expanding, I think they could possibly double and triple the capacity as we stand today in, let's say, 2025. If you're a long-term investor, then it's great. But if you're a short-term investor, then people might most likely short the stock just now because the trend shows there's another 2 weeks of a sell-off.
Yeah. No, I agree. As you were speaking, I pulled up Fastly's stock card on my phone, and back to your point on in terms of being overpriced even at the price that is right now.
Yeah.
So the 12 months, like they don't have any reliable earnings, so there's no real reliable price to
exactly.
earnings.
Yep. That's what the stock cut tells us. Yep.
Yeah, and then price sales ratio is 30, more than 30. So 30 times of their sales per share, the stock price. So they have to grow their sales by 30x in order to even grow into the existing basic valuation.
Yeah.
And then from a price to book value, they're 15 times their book value, which is not too crazy for the tech stocks. Usually they are much higher than the price to book value, but it's still overvalued. And financial analyst expectation, based on what I have on the stock card, is here we go. So it's about $93 or 93.25. So analysts certainly believe the stock can go up, but at the same time, it's probably anchored to where it was before, right? As opposed to what the reality is right now.
Exactly. They're a bit. You just have to see. I think they're standing on very strong support at $70-$75. I suppose the next flow down, if you check, because you went up in a straight line. So if you're a trend artist, if a technical trender, you don't see a real support. It doesn't go in steps. It just goes straight up. So you couldn't figure out where the next support down is. So it's quite a dangerous zone. So they could be 50 or 40, or they could stay at 70 next week. So it all depends. Yeah. But like I think you mentioned, is it they're like 30 times the earnings?
Sales. Yeah, 30 times sales.
30 times the sales. So it depends. I think at the moment, it all depends on institutional funds like BlackRock or Bailey Guilford, or who wants to start putting money because of their valuation pricing. I don't think it's attractive for those big fund managers to start putting in money, unless it's BlackRock growth type fund. Maybe they would try to invest, but at the moment, I think we need to see at least the next earnings in November. But I still feel bullish about the stock, but a long-term investor bullish, not a speculative investor.
Yeah. No, I agree with you. So the money inflow, which is usually what money flow into the stock usually happens. The big one happens with institutional investors, and I'm looking at checking money flow, which is what we use on stock. So like money inflow and outflow.
Yes.
It still is positive. Basically, 20-day checking money flow talks about if it's above zero, it means money is flowing in, net flow in, and if it's below zero, it's the net flow out. So even at this current price, it's at 0.08, so it's really tiny. It's really close to zero, but it's still there is some money flowing, net flow into the stock.
Exactly. Exactly.
So yeah, as you point out, it hasn't hit that like bottom of the bottom, because
Yeah.
if it was hitting the bottom, we would have seen a negative money
Yes.
flow, right? Like
On
we
the
would
money
have seen
flow.
money basically out, but
Yeah.
we don't see that. So that's definitely a possibility. And then I'm looking at like bunch of other sentiment indicators again on the stock
Yeah.
card.
Yeah.
So simple moving average, 50 day over 200 days
200 days.
still
Yeah.
is in 50 days still over
Yes.
200, so it's still
Yeah.
in that
Still above.
positive, like a golden cross type of thing.
Yep.
And
Yep.
then
Agreed.
RSI is in the middle, like 44. So relative strength index is, if it was under 30, I would have, like the same as you said, I would have said
Yeah.
like it's really hitting the bottom and people are like
Yeah.
that. But I totally agree. Like the numbers all show that the stock is still overvalued, and there is still some positive momentum despite the like the
Yes.
decline
The
in it.
trend
So
coming down. Yeah.
the stock can be still overvalued, as you mentioned.
Yeah. I think one indicator I think we need to see. One indicator which I saw before coming in here is I don't know if you know about Robinhood Investor. You know, there's this website called Robin Track. So I checked Robin Track. There's a huge spikes in people putting their money in, trying to long the shares. So it's so you know, people are confident after the earnings, because I think it's all Twitter. People are just trying to spread saying, you know, it's a good company, it's still strong, and we just need to see. And I think one really smart person on Twitter mentioned that one thing to check out for expansion is if Fastly starts hiring more people, which I think somebody went on their website and say Fastly is looking for more programmers, you know, for more marketing guys, and you know, they're trying to expand their base where they are. So it's a positive sentiment saying we've made IPO money, let's spend it wisely, reinvest it, and then grow. Which I think it's an excellent, positive sentiment, you know.
It is, yeah, on that note, I usually like, my favorite way of when stuff like this goes down, my favorite way of looking at whether the company can recover and kind of like grow back is look at their cash balance and their debt situation. So if they're positive in terms of cash and they don't have debt to worry about, they don't have debt to service, things like that, that means that the company can recover. This is a good sign. And if they don't, then I would be very worried about that, right? So you mentioned the cash from IPOs is still left in the company's bank account. So I agree, and I think I'm looking at their like debt balance and things like that. Basically, they don't have any debt to worry about, or any meaningful debt to worry about. And although they are like free cash flow negative, so their business model still doesn't generate free cash flow, but they still, as you said, they still have a lot of money left to spend on like developers and programmers and R&D and all that sort of stuff.
So I think overall, as a long-term investor, I think it's a good one to own. But then again, you know, with the IPO, like you mentioned earlier, IPO of 2019, there's a lot of good ones out there. You know, you've got the likes of CrowdStrike, you've got Pinterest, you've got Fiverr, you've got Zoom, you've got Beyond Meat. There's so many good ones out there. Sometimes it's quite hard to. You got Cloudflare, so much Datadog. There's so much to choose from. You know, 2019 was a good year, I think.
Yeah, no, it was a good year. A lot of good companies IPO'd in 2019. So I have a question for you. If you don't go with Fastly now, even at this current price, and wait for their November quarterly earnings, what would be a good alternative to Fastly, or in the same space, because they are in very interesting space. They're in this whole content delivery, as they call like edge computing, and you know, they make delivery of content, specifically videos, faster for big media companies. Does Fastly inspire you, or move you towards another sort of like competitor in the same space type of stocks? And if it's not Fastly in the same space, what else is on your radar?
Yeah, I think the other one that's on my radar that I really like, there's two of them. It's two different contracts, but the one that's closer to Fastly will be CrowdStrike. I'm quite a keen believer in cybersecurity. And, you know, with the likes of, you know, I live in Europe, so we always get these rumors about Russian hacking and all that stuff. And, you know, cybersecurity is something that the EU put a contingency in place that we have as to make sure that companies adhere to cybersecurity policies and everything. And then, you know, hear about China hacking to America and all that front and back. And I think CrowdStrike is among one of the better one that produce an all-in-one package that helps a company start up. And speaking to different people, I spoke to banking people in Canada, and they were saying that CrowdStrike has been quite a big favorite in the tendering process. And you think CrowdStrike, it sounds like a rock star type of a cybersecurity that goes to the likes of Nintendo, or it goes to all these big firms. But bankings, the bank sectors, the oil sectors are starting to look towards the modern day, not Sysantec or Palo Alto, but they're looking at CrowdStrike as an all-in-one package outsourced vendor. So CrowdStrike is something that I like because it goes hand in hand with Fastly.
Yeah. So what I guess I sort of want to wrap up the conversation on Fastly. Can you summarize the pros and cons, the ones that we discussed and the ones that you may have taken note on? What are the good things about it at this price, at this moment? If somebody wanted to look at the stock to go in now, what are the pros and what are the cons, and what are the risks basically? What's the risk and reward list of ideas around Fastly?
Yeah, I suppose Fastly, like I said in the beginning, it's an overvalued stock. But with these young companies, it's got momentum behind it. We like momentum stocks. Look at the likes of Google. There's no momentum despite the fact that it's undervalued. Even though the company is overvalued, but with the momentum that's behind Fastly and a potential 60 to 80% growth in the next few quarters, I think it's a positive sentiment for Fastly. And I think there are loads of people that's starting to understand CDN. People are starting to understand the basis behind Fastly because they are not subscriber based, they are not consumer based, they are more corporate level subscription based. And but I think people just need to be aware that if you want to buy Fastly and hold long term, you just need to buy on the way down. I think this is the opportunity now, because I may be speaking to you as of Hoda in 2025. You may go, wait a minute, why didn't we buy Fastly when it was on the way down? That's where people always miss the boat. That's where I always tell people, this is the time. That's what happened. If you look at Netflix back in 2006, 7, 8, 9, they were falling. People thought Netflix was a joke. But look at where Netflix is now. Netflix is always overpriced. Amazon is always overpriced. They were driven by momentum. So that's what that's what I want to tell people. Don't misunderstand the momentum stock. I think we're living in a different era. To maybe sometimes Warren Buffett's advice on value investing do fail on tech stocks. We have to use a different mindset for tech stocks, I think.
Yeah, I agree. No, I love that. On that point, I think the traditional valuation metrics are not necessarily applicable to a lot of tech stocks, especially because the valuation metrics that are built based on accounting practices. So things like PE, it's not like it doesn't really show the wealth of the company, because it doesn't really. It's a result of accounting practice, right? Like you decide what to put in your R&D, you could decide what you put into your capital expenditure and things like that. Yeah, and then that would influence your PE. So
PE ratio. Exactly.
It's not necessarily the best. Although Warren Buffett, as you mentioned, he does pay attention to cash and cash generation. Unfortunately, it doesn't generate cash flow either. So right. Warren Buffett won't be buyer even at this price for sure.
No, he wouldn't be buying this price. So we need to. I agree. So so I think that's the reason why I always tell myself, why did I never own Netflix back in 2007? Because I kept looking at valuation and I failed to catch it. So I tell myself not to. Missed it now.
So before we basically ask a final question and bring Javier from a soccer team to ask any questions about Fastly, I would want to play a little game with you. It's called Desert Island, and this one, I don't know if you watch or listen to some of the podcasts by the Motley Fool Show. Some of those guys ask this question. I love this game all the time. So imagine you're ready to play it.
I don't know what's happening, but I'll try to be spontaneous.
Okay. So it's basically if you are being put into an island, imaginary island, and for 5 years, and you don't have anything to no internet access, no stock market access. No. So you don't know what's gonna happen. You're just given one chance to buy a stock now, and then you can just check it back in 5 years when you're coming back from this deserted island that you're stuck in. Okay. So would you buy between Fastly and CrowdStrike? which one you would buy and leave for your 5-year vacation to the deserted island?
I think for now I would get CrowdStrike first. If I were to buy and leave, I'll get CrowdStrike just now. I think they're just a bit more ahead than Fastly in terms of infrastructure and their network relations. A bit more mature. I think the company is a bit more mature, and I think we need them now in this near to election date, cybersecurity and threats.
That's a good answer. That's a really good answer. I agree.
Yeah.
I agree. And the IPOs are like, we know the 2019 IPOs are all like Fastly. It still has a lot of years to go and mature as a company. So there's no rush. Probably 5 years is still, if it's a good company, it's still going to be around, and it's going to get an opportunity to buy it for the next 20 years, basically.
Yeah.
Very cool. All right. So I want to bring Javier from a Stockcard team, and some of our followers and members know him. So Javier, I'm going to turn your camera on, and I want to see if you have any questions for Alex about Fastly.
Yeah, I actually do have a lot of questions. Well, I have one main one, right? You answered a lot of them. My question, so I found it very interesting how you said that the stock was overvalued, right? And I agree, but like you mentioned, there is a lot of momentum behind it. So from my personal view, I would like to, because it's at a previous support level, right? So from a technical standpoint, I would like to see it show some signs of a potential recovery, and then go in. Maybe not try to find the lowest point, but have some confirmation, from a technical standpoint. But all the things you guys mentioned were definitely things I took into consideration. So it was very interesting. That was like the main question I had. So thank you for that.
Yeah. I think in terms of the technical fundamentals, because different stocks are treated differently. So I think for Fastly, I think somebody asked me the question yesterday. I think if you use the stochastic and RSI, if RSI goes like Hoda, you mentioned, RSI goes under 30, and then if the stochastic, I use the stochastic quite a lot on a 1-day interval. If the stochastic goes near 25 plus the RSI under 30, I think it's a fairly good time to buy. I think that's where the technical support level would be for Fastly. So people ask me, what price would you buy it? I cannot tell you the price, but I would say look at the stochastic and RSI at the 1-day interval. I think, you potentially might pick it at the bottom. I think I did it on the last few time, and I saw the trend. So I'm pretty confident that it might be a good bottom. A week or two, let's see how it goes,
Very cool.
Hi everyone, my name is Alex Ko. I run a YouTube channel called Family Investment. And yes, the name says family because my viewers are normally families, young families, or folks going into their early careers, learning about investing. And guess what? I'm not an investor. I'm not a financial by background. I am an engineer. I work in the oil and gas. All this started off because when I became a father, and I realized that I was minus 10,000 pounds in debt. My daughter was just born, and I couldn't afford a push pram. That was bad. We're all relying on credit card. And 8 years later, I'm here sitting here confidently to say that I run a YouTube channel. I've got a 6-figure portfolio, and I can confidently say that I'm not retiring at 55 or 65. I'm hoping to pull that closer. And on my journey getting there, I share my journey, hopefully that I can inspire other moms, dads, uncles, aunties, kids to invest early at an early age. I started late, but I do not want people to start late as well. Information is shared freely, and I want to share it freely with everyone. Investing is not hard these days because you've got your mobile phone here, and it's got everything from your brokers. It's got everything for information. It's got YouTube, you've got Twitter that you can learn from one another. So investing is not a game. It's not a gamble, but it's an educational tool that can help you grow your wealth. And that's me. So join me on Family Investment. I do run a podcast called Father with 3 Jobs. That's what I do. I've got a day job, I write, and I do my YouTube. So Father with 3 Jobs, that's what my kids call me. Daddy, 3 jobs. And they do moan that I don't spend enough time with them. So I do dedicate my weekend for them. So this is me. I hope that it's not just about me. It's about you all growing and protecting the nest for you and your family. and hope to see you soon. And just learn and share. It's a two-way traffic. I want to hear from you, and hopefully meet you guys one day. Thank you.